5 super high quality dividend growth stocks that are all offering a buying opportunity as of right now, even while the market is still trading near all-time highs. Stick around, drop a like down below, and let's get into the very first one. So the first undervalued dividend growth stock that could be offering a massive buying opportunity is ticker symbol KMB or Kimberly-Clark. Now, Kimberly-Clark is in the consumer staples household products, and this stock, side note, has been in my portfolio for several years now. Kimberly-Clark offers a 88 on the safety scale as far as dividend safety goes, according to Simply Safe. And Kimberly-Clark, as of right now, is trading around $125 per share. Now, this single stock is offering a buying opportunity potentially, and also is offering basically the highest starting dividend yield that we've seen over the past 5 or so years, considering the average 5-year yield is around 3.39%, and now we're inching closer and closer to 4. Also important to mention that Kimberly-Clark has substantial dividend growth, at least they have historically. To give you more of an idea, around 10 years ago, Kimberly-Clark was paying around $3 and maybe 25 cents on a yearly basis, now paying almost $5 per share per year. Kimberly-Clark also has 51 years of dividend growth and 89 years of a dividend streak without a reduction. Kimberly-Clark has been a staple in my portfolio, a very low beta stock that sort of stays out of the way, consistently pays and grows dividends over the long term. The next super high quality dividend growth stock that could be offering a buying opportunity as of right now is CLX or Clorox. Now, we all know what Clorox is, but looking at the dividend safety, Clorox is offering a 70 on the safety score, and it's no secret that Clorox has a pretty safe dividend. Clorox also has a 3.16% dividend yield, which isn't the highest we've seen over the past 5 years. At one point a few months back, Clorox did have an above 4% starting yield, but the average is 2.8%, so 3.16% still is pretty decent. Not to mention, just like Kimberly-Clark, Clorox has 46 years of dividend growth, 51 years of uninterrupted dividends. These companies have been paying dividends and growing dividends much longer than I've been alive. As far as dividend growth goes, Clorox has a cadence of paying around 2 cents more per share per quarter. At least that's sort of what they've done over the past few years. So although there is some dividend growth, it's not necessarily the quickest dividend growth across the entire market, but slow and steady wins the race. If you don't already have any shares of Clorox in your portfolio, definitely look a little bit deeper into it. The next single stock that could be offering an undervalued buying opportunity, and one of my favorites, is Toronto Dominion Bank or TD. Now, TD is an 80 on the safety score, making it one of the safest dividends relative to how high the starting yield is. With a 5.03% starting yield and an average yield of around 4.17% over the past 5 years, TD is offering a buying opportunity, at least going off of that. Now, as far as where TD is trading today, it's trading towards the middle end of the last 52-week range, so although it's not the cheapest time to buy this one, it's definitely starting to offer some potential. Now, TD is a little bit higher beta, so for those investors like myself that don't really want names in the portfolio that's going to whipsaw the portfolio back and forth, it's something to consider. But TD has paid a dividend for uninterrupted, ready for this, 167 years without a single reduction. So as far as dividend safety goes, I would say that at least has a track record of being pretty safe. Also a dividend growth streak of 13 years, so it's not the longest dividend growth streak. I wish it was a little bit longer, although just looking at the dividend over the last 10 or so years, TD has doubled the dividend amount, which is pretty substantial. If you want some exposure to banking, and if you want a dividend payer that's been paying for several years, definitely look into Toronto Dominion. The next single stock that could be offering a buying opportunity that also has had a comfy spot in my portfolios for several years now is PepsiCo or ticker symbol PEP. Now, we all know what Pepsi is, of course, 93 in the safety score, very safe dividend, 3.29% as far as forward yield, 2.83% as far as average yield. So Pepsi is not necessarily on some crazy flash sale, although relative to times in the past, Pepsi could be offering a decent buying opportunity. Now, one of my favorite things about Pepsi is the fact that I do believe that this stock has growth long term. And I'm talking about as far as share price goes, but the good thing is that Pepsi will pay you more and more basically to wait. Now, what I mean by this is that Pepsi's paid a dividend for 59 years without a reduction and growing their dividend for 51 years. And Pepsi has some substantial dividend growth. We're talking 7% on average over the last year and 5 years, and over 11% on average over the last 20. So if you're an investor that wants to hold on to a super blue chip stock that's somewhat on sale right now and offering a rather high starting yield and basically get paid to sit around and hold on to it long term, Pepsi could be a decent one to look into. Now, last but not least, the final single stock that could be offering a buying opportunity where it's trading right now is JM Smucker or ticker symbol SJM. Now this one came across my radar as of recently because it was flashing that it could be undervalued. I never once really considered buying into this one, but it is offering some decent stats. With an 80 on the dividend safety score, a super low beta, which I personally love, a 3.5% starting yield, where the average yield is around 3.05%. Not to mention dividend growth is pretty significant, 8% per year, and this is over the last 20 years, so the numbers look pretty decent. 21 years of dividend growth, 51 years of dividends without reduction. I personally would have to look a little bit deeper into SJM if I were to grab some shares and add it to my portfolio, but like I said, it came across my table because it was flashing that this one could be undervalued, so I definitely wanted to add it into this video. So there we have it, guys. Those are 5 different dividend payers and dividend growers that could all be offering a buying opportunity as of right now, even while the market is relatively pretty expensive. Now, out of every single stock we went through in today's video, I want to hear from you guys down below. If you only could buy one out of all the stocks we talked about today, which one would it be and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. I just finished my brand new dividend investing ebook where I share exactly how I went from 0 to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.